So we have a 10 to 14% income fund that pays quarterly. A lot of times people invest in real estate because they want cash flow. There's no really good cash flow option. So we're doing that backed by our real estate, which we underwrite to basically, if we did it as a cap rate, it's a 12% cap, versus multifamily, which is 6.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today's guest, Dr. Amir Baluch, is a Dallas-based fund manager for the private equity-backed Baluch Brothers development firm. They specialize in high-growth built-to-rent projects throughout the DFW Metroplex. With over $700 million in transactions and a notable zero capital callus, the firm combines medical-grade analytical rigor with institutional financial precision. By leveraging a vertically integrated team of industry experts, they provide positions in high net worth investors with protected asset-backed opportunities to diversify beyond Wall Street. You can find them at baluchcapital.com. Amir, thanks for taking the time today.
Hey, thanks for having me on.
Now, when we talk specifically about DFW development, new construction, I know you're involved in both single family and multifamily. For my money's worth, this is one of the best real estate markets in the country, and there's a lot of investors there, and there's so much opportunity. How'd you end up in DFW?
Well, the reason I moved here actually is because it was my parents' dream to live in DFW when we were growing up. They could never make the move out of Midland, Texas, which is like a 100,000 population place in West Texas. It's kind of famous for football and things like that, and oil. But they tried to make a move here and they couldn't make it happen. So when I finished my anesthesia residency in 2010, I made it happen for them, and I just moved here. Within a few months, I moved them here too.
Now, I mean, you've got a whole career as a medical professional. When did the real estate start coming into play?
Well, actually, even before I got into medical school, I was doing real estate because a lot of people don't know this. I got 6 rejection letters from 6 different med schools the first time I applied. So I didn't know what I was going to do with my life. So I started researching. Back then, I think it was like Netscape or something like that. They didn't have Google back then. I was like, hey, how do I, make it big? And I saw some statistics saying that a majority of millionaires make their first million in real estate. So I was trying to think, okay, let me get some rentals or do something like that, just hitting my head against the wall. But eventually staying persistent, I was able to eventually get into multifamily while I was a medical student. That was in 2005, I guess, a couple of decades ago.
Now, as a medical school student, are you looking at deals at that point in time? Are you, underwriting deals and you're also going through medical school? That seems like a lot of work.
It is a lot of work. So this is actually pretty interesting. This never came up in any other podcast, but so my roommate at the time, the year I didn't get into med school, I moved in with my roommate who was comp sci and something else. He was a double major in something. Oh, in business finance. he got a job with a private REIT in San Antonio. So as I was applying to med school, he was already doing multifamily back when they were getting deals like cap rates were like 11, believe it or
Yeah.
not. This is in the year 2000, 2001. So every day he comes from work and he's telling me what he's doing. And I'm like, okay, well, I'll try to do this single family home. I don't have enough money to buy an apartment complex. But he was showing me the numbers. He's like, hey, Amir, why are you even dealing with stocks? Look at what I'm doing here. Look at how I analyze the deal.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
And we were living in an apartment complex. So I'm like, okay, so I pay this much in rent and they're taking this much in the management. And okay, so maybe one day I should invest in this thing. And then of course I still keep in touch with him over the last, 25 years. So when he had a deal coming up, it was friends and family and employee deal in this REIT. They actually didn't allow it to outside investors. So it was such a good deal. Small multifamily in San Antonio. So I went there. I did the property tour with them. They gave me the pitch. I'm like, okay, this makes sense. And they told me cap rate like 5 times. I still didn't really understand it. I invested anyway without understanding what cap rate was. So, but over time, since I lived with my buddy Jason, who now works for another REIT, but he explained all the numbers. I'm like, hey, this makes a lot more sense than the stock market. And somewhere around that time, I actually took a 10% penalty and liquidated all my mutual funds and everything and just went all in real estate around 2005. So that's how
What
I
was that? What
got
was
it.
that first investment? '05. What was that first deal?
Yeah, it's an apartment in San Antonio called Chisholm Trace. It probably still exists. And it was such a good deal when they refied in less than a year. I got my principal back plus 50% more. So I put in 10 grand, right? So I got 15 grand back in less than a year. And I still had my ownership in there giving me 20% cash on cash return for like the next 14 years. Now,
Unbelievable.
yeah, they don't make deals like that anymore, right? People are, cap rate of 5 and 6 these days, but, but nobody was chasing multifamily. You didn't have these multifamily masterminds. Hey, you can do multifamily too. There's really not that much competition. So you're buying from mom and pops that just want to get their money out. They're
You
talking about
know,
5 years ago.
that's really what I think a lot of people in multifamily, and you were before this time, but I would say the time period post, the global financial crisis. So like
Right. Right.
2013, 2014, up until 2020, it felt like you couldn't buy a deal wrong, like specifically a multifamily deal. Like even if you did everything wrong, it would end up appreciating so heavily, it would still work out. But you were in an '05 and you were experiencing some of that. At that point in time, what was the thought process like while you were going through medical school? Were you thinking, okay, well, this is something that I'm going to do passively, or were you also thinking down the line, like, hey, this is going to be maybe a career path for me?
So I'm a pretty active guy. Like I like to get my hands in things and like to operate as much as I can. And I like to do high level strategy. So usually in all my companies, I'm the visionary. But if I need to do some ops, I can run ops also until in the interim until I hire a ops guy or a manager. That's usually how I roll. But for multifamily, I mean, you know, the ops is so heavy, we can't handle it. I've done some, 9 unit and 27 unit. Me and my brother handle that ourselves. Quad here, there, a triplex. This not that big of a deal, especially we have our own brokerage. But these bigger ones, once you get to 40 units and up, you need to have somebody pretty dedicated to that property. So for those higher up, I'm going to be passive, or I could be maybe part of the team, but not run the whole show.
Let's talk DFW Metro. So I lived in Denton for a little under a year, and I saw just how much development was unbelievable was happening in all the areas, in the urban sprawl of DFW and Denton and Prosper and Salina. Just every direction you go, there's subdivisions popping up. And Frisco, although already developed, is becoming more developed, and you just had unbelievable level
Yeah.
of growth and development. And I know you're active both in subdivisions and single family and the multifamily space. What type of deals do you have going on right now?
If you're looking for consistent, high quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Well, let me tell you right now, nobody's buying land. So it's really easy to negotiate good deals on land, like pretty much anywhere. And we know we always want to be risk averse, and all of our deals have to make sense if we rent it. Because plan B, if you can't sell the home you're building, you got to be able to rent it for a year or two and at least break even on the cash flow. If you break even on the cash flow, I mean, this is still, home run deal with the appreciation and capital pay down. So I'm not worried about it. So all of our deals had to be underwritten for BTR, and we only do infill developments. So let's say, a lot of people are out here in North Dallas, Salina, Prosper, and there's so much empty land. Imagine if you bought land there, there's nothing stopping somebody else from building right next to you and dumping a bunch of inventory on the market. And now the prices come down and days on market go up. If we stay in these infill areas, so for example, really big in Bishop Arts, if you type in New York Times Bishop Arts, New York Times 3 months ago said it's the number one place for single family development in the whole Metroplex. And the Metroplex is pretty much number one for single family development in the nation. So this is like,
Right.
this is like, by half a square mile, hottest place in the nation. And you can't just go out there and get land. Everything is off market from mom and pops. You got a door knock to get there. There's nothing online. And so when we build something, this thing is going to sell, and it makes sense as rentals there because it's a very walkable place. So we do things like that. Or like in Fort Worth, there's a constricted area in the historic district, or other places other places that are might not make sense as rentals. So for example, since you lived in Denton, you know about Highland Park. So
Yeah.
one of the richest neighborhoods in the nation, Jerry Jones, Mark Cuban, they all have places there. Believe it or not, we have places that make sense as rentals there too. But you can't just buy land there. It has to be off market. We're
Infill.
building we're building a $4 million duplex, so $2 million each side is the sales price, and it rents for 15,000 to 17,000 each side. If you do the math, you can get, with leverage, you're going to get double digit returns. If you buy it all cash, you're probably making more than a CD, and you get the use out of living there, which is what people think when they buy there. So, so that's how we look at it. But it's because we don't have competition. People can't just build across the street and flood the market. So we're protected, and our numbers hit pro forma, more than 95% of the time.
Now, you're, involved in so much. You personally doing acquisitions for these deals, and I know that it can be intensive for infill specifically, right? Because this is typically some type of distress that's happened, or someone who's just sat on this project. Are you doing outreach? Do you have a team that does this? How do you handle acquisitions?
So a couple ways. So my brother pretty much runs our development company. He's a developer. He didn't start off as a developer, but over the years he's learned to do it. We start off being coaches in a mastermind, and then people that couldn't do their own deals partnered with us because we had the money and we had the ops, and that would be a smaller that we'd let them be. They'd either wholesale the deals to us or partner with us, and we'd structure some joint venture thing. So that's how we got a lot of deal flows, by coaching other people that want to do fix and flips and construction. And then a lot of it is once you're in the neighborhood, the neighbor is going to come talk to you. So, and then we could go talk to them. They're like, "Hey, I like what you're doing. You know, you want to buy my house?" So we've gotten a lot of off market deals like that, but a lot of it's just door knocking and letting people see that you're working there. We rarely get anything on market. And some brokers, once they see that over the last 15 years, you close on every deal you put under contract, all the brokers want the for sure close, so they get the for sure commissions. So they come to us before something comes on the market. That's the easiest money they're going to make. If I say yes to it, it's pretty much a wrap.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
And
I
we,
mean,
yeah,
that's huge, right? So I've noticed that because I come from the background as a wholesaler before being a realtor. And once you find someone who can transact, you're like, okay, I'm going to go to them first because I know how much, relative pain I'm going to have to go through to find buyers and to have, a bunch
right.
of people come through for a showing here. And then, their things are going to come up with an inspection or with their lender and so on and so forth. I know this person can transact. They're going to get first shot.
Yeah. So what I did back in the day, since you mentioned wholesaling, we gave a bunch of wholesalers $5,000 check just to just hold it. And when we find a deal that you like, that meets our criteria, just cash it. You already have it. You don't have to wait for the money. So that's what we did. So all
Wow.
these wholesalers were sending us all the deals. We were the number one buyers from I forgot the name of the wholesaling company. It's big here in Dallas. You would know them. I can't think of the name,
New
but
Western?
the other one. Wait, no, hold on. What's the other one?
Ah, man, there's so many. I don't just want to keep
No,
naming
but
wholesalers.
New Western branched off of Net Worth Realty.
Okay, yeah.
Yeah, yeah. So New Western branched off of Net Worth Realty, but we were one year we were the number one buyers for all their wholesalers.
Wow.
It was like 12 years ago or 15 years ago. But
I think there's going to be a lot of people who might, or at least a handful, who are going to take you up on that strategy. Hopefully, no checks get cashed without their knowing. But
yeah,
one of the things that I've noticed, and hearing your story, is the ability to pivot. Right. So, I mean, you started with investing really through what was it, a syndication that you first invested in?
right. I was an
And
LP.
then you've gone into infill and into multifamily. So you've been active in multiple different spaces. How did you identify when the right time is to look at a different segment?
So in 2010 and 11, when I moved to Dallas after residency, I got my securities license and joined a boutique investment bank, and they were pretty heavy on commercial real estate. So I worked with them for about 5 years, and that's what really accelerated my knowledge when it comes to putting together deals, securities, and underwriting, especially. And so we did about a little bit under $1 billion worth of commercial real estate, private equity, and hard money lending. And so when I saw, we have the weekly meetings, monthly meetings, and we just see the cap rates compressing, which means you're paying more for the property. And instead of looking at 20 deals to invest in one, it became 50 deals and then 100 deals. And when it becomes a bidding war, eventually some amateur that wants to just close his first deal will
He's
will
gonna bid.
overpay, or sometimes some syndicators that just want fees up front will also overpay, but with other people's money. So that was an issue. And then it doesn't make sense to be in that space. And so I saw that around 2016. And that's when I actually left multifamily. And then I had a non-compete. I had to wait for 2 years. And then we started working on the single family. And then by COVID time, 2020, I was out of all my commercial real estate deals, which was almost the peak. I could have waited another 2 years or 1 year to sell on my commercial at a peak, but We just sold out when cap rates. I mean, we're selling at cap rates of 4. So I'm like, yeah, let me just take that and let's dump it into a bunch of land and start developing single family, which is not as sensitive to interest rates. And the valuation is not based off of cap rates; it's based off of comps.
Yeah.
Always go up because and we always have inflation. For the most part, we almost always have inflation, right? So that was the trend I wanted to follow, is this inflationary trend after, because during COVID, 80% of the nation's money was printed that 1 year after COVID. So
Right.
that means we're gonna have massive inflation. And by the way, if you look at the market now, we're just now seeing some of that. That's part of the reason the stock market isn't tanking or correcting as much as it should, even though we printed, you know, 4 times the money after COVID. It's taken this long to actually see the effects of inflation on stock market prices and commodities and things like that. That's a whole other conversation. Whole
Yeah, I mean, you mentioned the single being based off of comps and multifamily really being controlled by, cap rates and rents and so many other more complex factors. It's two different worlds, right? So you've
Yeah.
had experience on both sides, and in development. We are coming up on time here though, Amir. Any new projects that you're working on? And then also as well, what's the best way for folks to get in contact with your team?
Okay, so for the new projects, I mean, we're pretty focused in Bishop Arts right now. That's like the hardest part in Dallas right now. But a lot of people don't know that. And then we are going to be going to actually Denton. There's some land owned free and clear. We're doing a programmatic JV with somebody up there where they contribute the land and we do the development and do like, a 2/3, 1/3 split. and uh, and then we will have the next project we have is a strategic yield fund where investors that want cash flow. It's the biggest complaint from a survey I did last year is, hey, where's the cash flow? It's not that much in multifamily. So we have a 10 to 14% income fund that pays quarterly. A lot of times people invest in real estate because they want cash flow. There's no really good cash flow option. So we're doing that backed by our real estate, which we underwrite to basically, if we did it as a cap rate, it's a 12% cap, versus multifamily, which is 6. Like if you did developments all cash, it's looking at 12% return. So that's we like that buffer and we back it with a pref income fund. So if people want to do that, they can find me on LinkedIn. Just look up my name, Amir Baluch. I should be the only one on LinkedIn named with that name, I think. If there isn't, then find the one in Dallas because that was me. You can also go to baluchcapital.com and there's a little contact us button there. Or if you're in Dallas and you want to come by, we're office at the Crescent in Uptown, and we're not too far from the Goldman Sachs building. In fact, before we get on the call, I want to show you how close the Goldman Sachs building is to where I am. So basically, like right there. Wait, hold on a second. That empty spot is going to be
Yeah.
the Sachs building right out there.
Look at that. What a view.
And then the rest of Dallas is right there. So we're expecting 3 to 5,000 people there and still 400 people a day coming to Dallas. So we don't see this market slowing down anytime soon.
Amir, thank you so much for coming on the show today. Thanks for your time.
No problem. It was great.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.